Good morning, everybody. It is 7:30. It is the 16th of February, Friday in 2018. All right. Hope all of you are doing well today. Yesterday, I don't know if you heard on Sirius XM 167, I was on there briefly with Andrew Crystal from Crystal Nation on Canada Talks 167. That was pretty good. Talked a little bit about day trading, Forex lens, and yeah, it was a pretty good interview, I believe. If you check the Facebook page, they will have sent out some information on that and an opportunity for you to listen to it. Yeah, it was a lot of fun. And I believe I'll be going back there sometime soon, I believe. Be a little longer, maybe, not sure. And I got new glasses. I'm used to rimless. I feel like I'm looking through a bowl. Wife picked them out. I don't have any style. In fact, I don't even dress myself. In fact, I didn't even know I didn't have a wardrobe until I got married. So, anyways, okay. Yesterday, we really only had a trade. Actually, had no trades going into the day. It was pretty volatile yesterday. We've kind of had kind of a dull week. Not a very good performing week. Not a very exciting week. We've had exciting price moves. Last week we had a really great week, and now we're looking at what's happening today. Let's kind of take a little walk through a little review of the week. So what has gold done? All right, we were looking at CPI numbers that came out middle of the week here, and looking at how prices were going to respond to that, if there was concerns about inflation coming out, and we didn't really get a whole lot of real worry about it. So what we've instead seen is that we've had a lot of, finally, some divergence in our normal market, return to normal market behavior. Equities went down a little bit, gold went up, but really this is an odd chart. So if we're looking at gold and then we compare it to equities are moving up quite a bit. Equities are moving up, gold is moving up. The dollar index, though, is moving down, except we've caught a little bit of a bid on the dollar index. Caught kind of a nice bounce on it down at this fib line. But our major fib line is down here, so it bounced right off this harmonic level. That's kind of a cool area, kind of a good bounce to keep an eye on. The euro, massive move. If we look at last Friday, a week from today, we were trading around 122.06, and we got as high as 125.55. We're like 350 pips of movement. If you caught these, I'm not sure, but yesterday at 8:30, oops, why is it doing that? Yesterday at 8:30, we had sent out an alert on our cryptos because they were entering the breakout levels on Ethereum and Bitcoin. And then at 11:43 last night, so I was up late, I wanted us to short the euro between 126 and 125.4, which is where we're kind of sitting at. Reasons why. Made a little idea on this yesterday. Reasons why: parabolic rise. We have anemic volume on the daily and weekly on daily charts, and this weekly chart is anemic volume. It's really horrible. way below average. I mean, just look at this right here. It's way below average. Not even half. We have extreme overbought conditions on our composite index. This is which chart is this? Daily. Yeah, so like on our 4-day and our 8-day, so 7+1 day composite index, we're in really high levels here still. We have a new moon. And again, new moons, remember if we're using Gann's theory on the moon phases, is that if price is at a swing high or a historical high during a new moon, which means there's no moon, new moon means no moon in the sky, then we have a good probability of price retracing for 2 weeks. We also have a pivot in time with our time cycles. So that's the reason for the short. I put that out last night, and if we fast, I don't know if it will. It doesn't want to. That's okay. So it's a good short area still. We should experience a lot of weakness at that level up here and experience some pullback. Looking at, yeah, we had a 21 day. 21 days is usually a good reversal area. Okay, now other pairs. The UJ, oh man, this thing is just beaten up. I mean, it's moved so fast I haven't even put in these other harmonics. Probably look at it from this way. So we have caught a bit of a bid down here. Technically we have had a parabolic down, and so we should see a bit of a retracement. Might experience resistance right here. Might be a good short, re-enter to short here, or to continue long. We'll see. For right now, the euro trade. It's a good area. We're going to go deeper into these. Aussie dollar may find support on the 45 here and this arc, or we may have further capitulation to the downside. New Zealand dollar, kind of in the mid. US dollar, Canadian dollar, finding a little bit of a bump there. Really, again, if we're looking at all of these pairs and looking at the dollar pairs and watching what's happening, this is mainly related. The dollar index is up 0.31 now. We're up 28 points, 28 pips on the DXY. So, probably, folks that are trading on the London session, they're definitely getting into some profit taking right now, closing out positions, ending their trading day because, it is 7:30 a.m. here, so it's 11, almost noon in at the London session. So very typical and common. We've seen this kind of sell off or increase in prices we get to this time. And actually, that's not right. It's 1 o'clock there, right? Yeah, I know math. The euro pound. So we've got the euro pound floating around. So looking at the euro pound, it's kind of it should tell you how much influence the US dollar has over the markets, because there's not a lot of fighting between the dollar and the pound. They are not really competing heavily against one another right now, but everything is reacting heavily to the US dollar. So we can kind of avoid this one. This is really the US dollar, the Swissy, US dollar, Swiss franc. That is, if you can't trade the dollar index, like we can't trade the dollar index, that is the DXY, essentially. That's catching a nice bid right there. you know, we did have some news come out here, building permits. In fact, I didn't even read those. I thought I did. Okay, so we've got import price index is up. I'm making sure my mic is on. All right, housing starts. Wow, holy cow. Well, that is something of a beat. Jeez Louise. I mean, okay, so our housing previous was negative 8.2%. The consensus was 3.4, but the actual was 9.7. That's big. That's a lot of homes being built. Wow. That's good news. Maybe. Without getting into too much detail, housing stuff's a good sign of inflation. Building permits were up big time. Previous was 1.302 million. Consensus was 1.3. We had a beat of 1.396. Yeah, so that's good. Import price index month over month, 1%. All right. Year over year was 3.6. Cool. So there's some bullish numbers. And okay, let's take a peek here. Let's go over some things. Low volume. Why is there low volume? Well, it's the Chinese New Year, so we basically have a huge chunk of the trading population not participating in these markets. We also have a lot of jittery trading going on. It is not healthy to see these moves in equities. I want to bring us down to the daily, show you what I mean. That is bearish as hell. We've had a rejection on the 0.68 golden ratio, Fibonacci ratio on our daily. That is a ugly sign. The volume has been below average. It's been ugly. Not a very good sign. I mean, even looking at the ETF itself, that's not a very good looking that's not a very good looking candle. Volume is horrible. The Nasdaq is the only one that's sad. I mean, the Nasdaq I don't even trade futures that much this time of year. But now I want to. The Nasdaq, we're showing a fairly similar candlestick structure, volume structure. Not a lot of activity on this rise up. There's activity. It's just below average, and so this is looking fairly bearish to me. Not surprised if we see some sell-off going on into the end of the day here. But again, markets can remain irrational longer than you can remain solvent. This week's a good example of that. The Dow, just not a great view. All right, now let's go back. Look at gold. What is gold doing? So we've had a really great rise. Gold actually traded above average volume on Wednesday, right? Was that Wednesday? 14th? Yeah, Wednesday. Yeah, that was a wild trading day. I mean, if we go back to this, look at the 14th. Here's the 14th. Pretty much after we got done talking is when this thing just decided to rocket ship up, because Wednesday we were looking at a few shorts in the euro, longs in the UJ, and shorting the Aussie dollar on a pullback to the 0.779, which I mean, yours truly got ran over. I didn't just get ran over. I got ran over and then backed up, and then the tires skidded all over my body and made me just a grease spot on the road. I got ran over. And so I apologize if I put anybody in the proverbial under the bus you got thrown. But we should be looking at some, changing in the trend here. Let's take a peek at the euro. So what do we got going on? Let's look at the structure, all right? We've essentially got a triple top. We did reach a higher high here. We really did reach a higher high from our January high, but it wasn't very good. I mean, there was not a lot of, I was watching this last night closely. There was not a lot of, that's why I was up late. I was like, this move is very weak. It's just like auto buy buttons on the algos. Not a lot of activity here. A lot of movement, but not a lot of activity. So I really stress the short there for a lot of reasons. One, we're up against a really major resistance area. This is the exact midpoint between 125.77 is the exact midpoint in between the entire price history of the euro, from its all-time high of 160.38, if you can believe it, and its all-time low of 90.27. This blue line is the exact middle of the trading range. This is going to be the hardest place for price to want to get above or below, with the exception of the extreme lows and highs. This is the hardest point for price to get above or below. This is going to be a hell of a trading area. This level is also if we look at the swing from 2014, where are we at? That's right on the golden ratio of 618 on a monthly chart. Monthly fib from swing high to swing low. 618 retracement here. That is a powerful reversal area. That's the reason why I've been so biased on shorting this area, because we are just in a very strong shorting market. We have these extended parabolic moves. We have these weak moves up on low volume. We just have a lot of good bias for some rejection off these levels and to catch some possible short-term shorting opportunities. We'll see if there's going to be a lot of conviction to buy it back. But, I'm excited to see if we get above this, because we could get in some long opportunities pretty early. In fact, if we get a nice retracement closer to these areas, we should be looking at some buys. And maybe if we get a pullback to this line here, we may go long. We're going to watch this, but want to look at it from another viewpoint too. This angle, obviously the euro struggled to stay above this angle here. It's struggled a lot to stay above it. So we've fallen through. Looking at our fib levels from these swings, 78 retracement, sitting right below it. We're catching some supportive buying at this level, which is normal. I mean, the 24.50 zone, we should expect to see a little activity there to support the price, because we are on the hourly. We are really oversold on our composite index and trending to oversold conditions on the RSI. So we should expect a little activity to support price, maybe not a lot. So let's just keep an eye on this. Now the UJ, the dollar yen, is weak as hell. Let's look at this chart on the weekly. Let's see what we're doing. Last week I was indicating a possible inverse head and shoulder setup, which we did have a nice play out, and that did not happen. We have had just a real big drop in our price. Now I want to take a look at some cycle analysis here. We're going to get some trades in, but I want us to look at this. Remember, the numbers in Gann's analysis, they're very, very important. So, series of 3s, 7s, 9s are big deals. In addition to, I left all my notes upstairs. In addition to, we have, if we're looking at numbers equaling degree angles, so we have 30, 45, 60, 60 degree angles are sextiles. Anything like 45, 90, any squared angles, any square type of angle or number is going to be a bearish level. Anything that has a sextile is going to be a bullish level. We've had a real breakdown on price here. If we're looking at a trending downline, we fell below that. Now, we have attempted to buy this back up. There is some response. Actually, we've had a lot of volume response. And let's look at these swing lows on our fib. And that's right on the 618. We're right in that value area, but we're below it. If we cannot cross above, like we don't want to go long yet. We were fine trying to attempt a long up here when we were above that 618, but we have just really capitulated through that. And in fact, if we're looking at this now, currently it's getting some rejection at that angle. It's wanting to try and cross above it. This is an area that we need to look out for price to cross above. Just as the euro is struggling to stay above this zone, we want to see it stay below. Okay. So the euro trade is still good and active if you got in between 126 and 154. Anywhere in this zone, to me, is a good shorting opportunity. I'm even comfortable probably holding this into the weekend, which I probably will. Might be the only trade I hold into the weekend. UJ, that dollar index is really, really weak. When we have really, and okay, well, I should say this: the yen is strong, the dollar index is weak, even though it's growing. But I'm not very comfortable. There's not a lot. There are strong probabilities of price catching a bid and having a good retracement at this level in the yen. In fact, we could have anywhere between that 107.8 and now and lower. Great areas for high probability short-term reversals. But on the long term, we have a lot of dollar weakness coming up unless something happens to the contrary, in the time cycles, if we're looking at the dates, the next major date is March 21st. And so these trends could continue until March 21st. We could really see the yen travel a lot further down. So be aware of that. The Aussie dollar, if we're looking at the structure, we are looking at this entire move here. Where did it get stopped? Stopped down at 618 fib line. We're down below this angle. I am looking at a possible shorting opportunity if we can get below this zone. We've got a couple ideas on the longs and the shorts here. The thing is that that's pretty bearish. Just based on structure. Why don't we wait for actual pullback, maybe to 179.35.40. New Zealand dollar. Now, this is a this is a pretty textbook cup and handle. again, if you aren't familiar with that, it signifies triple tops, and they can be extremely bullish or they're indicative of strong rejections. Again, cup and handle looks like this. That is not an. Here we go. What? Something's up with that. There we go. Okay, so it's like a or a saucer. You know, whatever. There's so many names for these, but generally, this is the kind of formation we look at when we're looking at a cup and handle. Right? Forms a cup, and then there's a teacup. You know, there's all sorts of names for these kind of things, but the price behavior and psychology behind this move is that we experience a double top. We don't get a big sell-off. In fact, we get a rally, you know, somewhere between 68 to 75% of the move up, and we get to the next trip top. The next triple top happens fairly quickly. And if there's not an immediate sell-off, because this can be very bearish too, if there's not immediate sell-off, then we have a rally to the top, okay? Now, notice also that the New Zealand dollar, it is really close to its historical high up here too. I wished, and we're on a 50% zone in our square. I mean, we're at a very strong reversal, difficult area for price to get above and test. If we're looking at this on the weekly, pretty clear weekly, but man, that volume is just not good. If we want to look for some confirmation of, and we want to see some structural difference here, look at the composite index versus the RSI. Oops. We have some divergence in these areas. We are still showing strength on the daily with the composite index, but we are showing some weakness on the RSI. And so if we're asking which one is more important, the composite index. The composite index is like an RSI 3.0. It's, well, man, oh, got a neck ache. If we want to look at it this way, the RSI is like Windows 95 and the composite index is Windows 10. It's really that much of a difference. Very similar structure, but a lot more effective and updated. Second here. Let's see if we look at those levels there. Yeah. Oh, you know what? I think we might even have, from the composite index, we might even have a slight indication of hidden bearish divergence here. If we look at this level compared to this, we do have a lower high, not by a lot. I mean, the high here is 74.4 and the high here is 74.37. Not by a lot. But what we do have is we do have a higher high than this level here. I mean, we have a fairly flat tops, but we have rising tops here. So if we have higher lows, sorry, if we have lower highs in price, but we have higher highs in our oscillator, that is hidden divergence. What does hidden divergence mean? It means that if we've been in a downtrend, which on the weekly, hard to let's come back to that one. it's almost as if the RSI is showing a more honest representation than the composite index. Let's come back to that one. This might just be indicative of the measurement of the time levels we're using, though. Forget what I said. Canadian dollar, US dollar. Oh, that's fairly healthy bounce there off that pivot. This is what I was talking about, that pivot in time, when I was talking about this idea here. I guess it doesn't want to update till the daily's done, but I had a pivot in time in Gann's cycles. So what that means is on this structure here, this red area means that is a pivot area. That means that we have a strong bias for price reversing a trend when it gets to there. And if we look at our composite index, we have good structure for downwards movement based on the daily. We have 1, 2, 3, 4, 5 days up. Old trend line here. Wait, is that a trend line? Is that part of the Gann? Oh, no, yep, that is part of the Gann. Got it rejected on that angle. Healthy shorting structure here. Pretty healthy. That's a good area. Looking at these on the dailies because it's really important. Aussie dollar, great shorting area. New Zealand dollar. This is New Zealand dollar. Let me clear my head. Let's look at cryptos. Cryptocurrencies. Yesterday, I put in a thing on this yesterday at 8:32 a.m. I said Bitcoin near 10,000, ETH near 1,000, breakout soon. Let's go over this real quick. Let's look at these cryptos. Our majors. Now, Litecoin. What did Litecoin do this week? Boom. Breakout. Consolidative area. A lot of these kind of areas of resistance. Let's here we go. We had a very nice move here on this breakout, this confluent zone. We just really blasted through it. This was such a great move. Generally, if you see weakness, because we have this 382 fib line in our square, and we had massive volume participation to push it through, so that's very healthy. And then we're respecting these angles. The law of angles states that really, sometimes the rule, I shouldn't call it the law, it's the rule of angles. I don't know why I keep calling it a law, but the rule of angles is that when an angle breaks and then it closes and trades below it, then the probabilities are extremely high. I'm going to say like 95% of the time. Actually, I know it's 95% because I've gone through various instruments and tested like 3,000 different breaks of angles on 4-hour charts, and I know it's 95%. 95% of the time, when an angle breaks, the rule of angles does apply, where it'll move to test the next angle in that direction. So really, we should have seen price move to test this. If it doesn't, that's like an aberration, and it shows significant weakness on that, and you should expect a nice change in the. You should expect like a continuation of the trend. Really, what we kind of observe in that behavior is that we have almost like it is a version of divergence, but we have a lot of bullish activity in Litecoin. Look at that breakout. So Litecoin was performing ahead of its peers. It was lagging amongst its peers for a while, but now it's kind of ahead of its peers. Where the heck is that? Okay, here it is. Yeah. All right, I have the square in here. Couple squares. It's a kind of a mess. But let me clear this up a bit. Just looking at this structure, if we look at this arc in our square, price was respecting that and it was getting rejected. We like to see that. We like to see this respected because that means that the move that follows has a lot of integrity behind it. It's an honest move. And so this continuation here outside of this on the 4 hour, very strong sign, very good signal. We're going to see another leg up. All right. In fact, we should see another big leg. I mean, if we're going to use Elliott, if this was leg 1 and then we have leg 2, we're going to see leg 3 really kind of blast off here. It may get stuck. Third leg in Elliott can't be the shortest. We probably get above 250. But I want to show you this. Pay attention to this level. This is the mid level between our harmonics, 4-8. All right. Look at what Ethereum did. Where it is. All right. Its 50% zone between its harmonics is way up here, but Ethereum is the only one out of Litecoin and Bitcoin, and even Bitcoin Cash, if you can believe it. But Bitcoin and Litecoin have broken out of this kind of consolidative structure. Ethereum is coming against its trend line, and it's going to break out. I mean, thrusting some moolah behind Ethereum right now is almost like a guaranteed win. I've pulled out all of my Bitcoin holding and Bitcoin Cash holdings and about 20% of my Litecoin, and I put it all into Ethereum because it's like this is just the guy who's waiting to move next. I mean, he's just kind of hanging out. Litecoin moved first, then Bitcoin did. If you look at Bitcoin, now this is healthy. We want to see price kind of coiling. These were some annotated charts I did for a client last night. We're in this consolidative area here too. We're kind of hovering around our 10,000 area. Totally normal behavior. We really kind of want to see Bitcoin catch some trading around here in accumulation. We'll definitely see another accumulation phase going into this. We may not break out of this until the 1st of March. We may be trading in the square for some time before we get a big old breakout. But that's healthy to know because we know that our downside risk is limited to around 7,500. Our next, we have two major support zones at 93.75 and 83.33. Could it go down there? Sure. Yeah. I mean, that's actually kind of cool if it did. We just get to add lower. We know that there is a flight of capital into these cryptocurrencies. And I want to go over that again. Sorry, I'm taking a little while with this. But I want you to observe this area. We were trading below real average volume for a while. It wasn't until, remember this, I've been talking about from the 26th of January to the 5th is when we'd see a reversal in price and trend. That happened. But what happened here? We started seeing a sell-off in all of our equities around that date. Before it, really. Yeah, around the 5th. We saw a big sell-off. When we started to see decreases in the daily volume. All right. I mean, we knew, look at all this price movement down, and then we've had a decrease in that volume being traded. Forex as well, decrease in the volume traded. But what happened is things were going down. The gold was going down with equities, and bonds were going down too, and then bonds and gold and the dollar and everything's moving up together. Nothing's operating like it usually does, and it doesn't have to. But all we've had in our cryptos is we've had a ton of return of capital. Because if we look at CoinMarketCap, I really don't trust its levels. But CoinMarketCap, we were down to 418. Well, sorry, at the low at that 5,800. Excuse me. Our market cap was 236. What was that? at the low we were at 279 billion, and we've gained all the way up to currently 474 billion. All right, we're near 500 billion. We're near the half trillion market cap. We've added a significant amount of volume or value back to cryptos. So while there has been a whole bunch of money flying back into this asset class, we've had a lot of outflows of money from the dollar, from futures, from general equities, and from the Forex market. Where's it going? Is some of it sitting on the sideline? Sure. Did some people, buy some of those dips in equities? Sure. But there's a crap ton of money that has flown back into cryptocurrencies. And there's a lot of reasons why. One of the gentlemen that I do a lot of analysis work with, he's a huge fundamental trader. I mean, he looks at broad market analysis. I mean, he's a classic institutional driven kind of market trader where I am technical based. So I like to visit with him and listen to his side of the research because I find a lot of it, we complement each other's research a lot, but also we can be very contrary to one another. I mean, there are a lot of times when my style of analysis does not match up with his and vice versa, but that is really healthy. That is such a healthy, good kind of analytic relationship we have together. But he has made the point that, and this really kind of confirms Gann's style of analysis, is that cryptocurrencies are the only type of asset class that is not tied to any debt. If there's going to be a flight from fiat currencies, I mean, if the dollar collapses, horrible thing to happen. It's not like people are going to find security in any other currency on the planet. If the dollar collapses, that's it. I mean, so much of the world has been based on this, and it's not, the dollar isn't just important because of its importance as a reserve currency. It's indicative of the world's most important economy, and I'm not trying to go USA. It's just that's the reality. And if there's a loss of faith in the dollar and worries and it collapses, that's big. Where does money go? Does it go into gold? What are you going to do with it? Sure, there'll be flights of capital into gold and metals, and you start hearing sales of things, but cryptocurrencies, they're safe. You can go across the border anywhere on the planet with cryptocurrencies because you're the only one who has access to it. You can't drag your bars of gold and silver with you into customs. They check that. They can't check you're not going to get, your cryptocurrencies are going to get checked at customs. There's nothing they can do about it. That's the value. Without getting into a philosophical discussion about it, but you can't not get into philosophical discussions about cryptocurrencies because that's the exact reason why they were created, to reduce central control and authority of currencies. That's the reason why they were created. They weren't created to create a Ponzi scheme. They were created to they were created for liberty, financial liberty. So it's impossible to talk about cryptocurrencies without talking about the philosophy and the politics behind it. And talking about that, getting a little preachy, coins like Ripple and Neo are an anathema to the politics and the philosophy behind cryptocurrencies. Neo is ran and managed and run by the Chinese government. It's in cahoots with massive corporations from here in the United States. I'm not getting all tinfoil hatty. I'm just telling you the truth, is that the Chinese government has realized, probably before any other major government, that they cannot control cryptocurrencies. They know that they cannot control it. Not even their Great Firewall of China can control it. So they figured if they can't control it, let's get control of it in a sneaky way. Let's let it happen, but make sure that they're the ones in charge of it. So that's what Neo is. Ripple is the capitalist version of that. It's the crony capitalist version of that. Ripple is seeking to comply and have the interest and the controlling interest of central banks. So you have either a controlling government or controlling central banks are your options with Neo and Ripple. And are they great trades? Sure. Yeah, they're great trades, but I don't touch them. On principle, I don't touch them. I think they're antithetical to the entire idea behind cryptocurrencies and the purpose behind them. Ask people in Venezuela who are, mining Ethereum and Bitcoin and Monero to pay for goods and services, to find food to eat. That's what they're using. And then their own state oppressive government under Maduro, they're trying to come out with their own oil coin. So they know the bolivar is shit, so pardon my French, but so they're going to create an Venezuelan oil-backed cryptocurrency, and there's actual governments, supporting this. But anyways, gosh, I went on a rant there. Sorry, guys. Let's go back to looking at our. Okay, now we see futures are dropping off a bit here. This is pretty bearish looking. Euro, ooh man, guys, I think we got in some good ones here. Dollar still showing weakness, but that's a pretty, oh god, that is a nice looking candlestick. Look at that. Get bigger there, guy, and form a nice high on that hammer. That's pretty strong. Let's go back to our euro. Yeah, big weakness coming up here. Big weakness. Yeah, we're already looking at these shorts. Where are we at? We shorted at around that zone, so already we're, over 108 pips in profit from that trade. And I think you can anticipate this going lower. UJ. The only reason I'm not so crazy on UJ, and this is related to the time cycles, is the current moon phase. Okay, the current moon phase is to push prices down. Now, what happens when prices are at lows already? Well, let's look at that. So here's our moon phases. And again, the top is new moons. So what do we do when new moons are kind of at a market low already, or a swing low? We got to look for that. Sometimes those are hard to find. Okay, like right here. We are at a swing low. We had a little bit of a retracement, but then we really continued down. Market low, or sorry, we're looking at market highs. New moons at market lows. Oh my gosh, I feel like it's a Monday, but instead we had a rise, and then we had an opposite inverse move here. So if things are kind of near their swing lows, and we are at a new moon, we can look at not a whole lot of movement over those 2 weeks. Can we get big reversals like here? Sure. Yeah. Definitely we can see that happen. But looking at these charts, what is the most probable activity of price during a new moon? It's to go down. What is the most probable activity of price at full moons, which indicate increasing prices for 2 weeks? They go up. So on the dollar yen, we are looking at, we're looking at an inverse move probably. Definitely if we had, we're like, full moon means that we were supposed to see prices rise up. We did get that. We really did. But we had a big old dump here. We had a big sell-off. We had an inverse move. So we could look at an inverse move back up, followed by another 2 weeks of increasing prices. So but more than likely, we could get a culmination for a few days, hovering here and flush down farther, or we'll just get kind of a range trade going on. So the best mover right now we're going to see is we have a good short opportunity on the euro. We're looking at a good short opportunity on the Aussie dollar. We're looking at a good short opportunity, definitely on the New Zealand dollar. Pound dollar too. Oh yeah, we got a great short opportunity on the pound dollar. All right. Even though all these pivots aren't drawn on here like I have them drawn on the Aussie dollar, this pivot area, this date, is the same for all of them. Same for all of them. Okay? So keep that in mind. Looking at Bitcoin, we had a nice rise up here. We should expect, even though the moon phases are here bothering us, maybe a consolidative move for 2 weeks before we shoot back up. All right? Just keep your eyes on that. Those are our trades. Want to look one more time. We could consider re-entering on a pound short at a revisit of the 140.06 area if we get there. We can look at, okay, we can look at a couple areas on the New Zealand dollar. We could do a long two at 0.741. And we can look at a short at a breakdown to a point. We would look at a re-entry short probably. Because price would have to go, yeah, we'll go 73.78. UJ, as much as I really want to, as much as I really want to go along here, man, it's just not. If I have to think about it too much, I'm going to err on the side of no. I know that I'm comfortable with a long position above here. We really want to see, I'll say this. Long USD JPY, long only with the hold and consistent trading above this fib line, which is near the 106 area. That's the only. I mean, we are getting a kind of a inverse head and shoulders on the hourly here showing up. Yeah, we could get activity like this happening. But yeah, we'll wanna wait to see if we can get a break of this line and see what happens. Aussie dollar. Damn, I bet I missed that Aussie dollar trade, didn't I? Shit. I really like trading the Aussie dollar. And oh no, I bet we could still get in there. You know, short out a pullback too. We may not get that pullback, but it's breaking back down below the 45. Yeah. It's a nice pullback to that 618 double top there on the hourly. That's good. I mean, we'll probably see further movement. 1, 2, third leg is going to be even farther. Got a trend line here if we get a break. If you want to risk it, because I'm going to. Looking at kind of point, you need to draw it. Let's see. Yeah, we'll just say break a 79. A little late on the entry. Don't like buying don't like shorting at the bottom of that trend line. It is really oversold. Get careful of that trade I just put in. Be very careful of that one. I mean, as we go up, we're not going to see as big of signals for the short. 8 hours 8 hours are a good one though. Daily's even going to show us a better one. Yeah. Yep. A lot of weakness there. Kind of a nice setup for our third leg down. Third corrective wave. Cool. Yeah, so we got some good trades. Check out our cryptocurrencies one more time. Litecoin still pretty bullish. You know, Bitcoin, it's catching a nice bid here. Yeah, I wanted to show you on this. This is a square of Bitcoin from its breakout. It was based on a weekly chart. That's why it's a little off here. But this was the end of the accumulation phase. This was all the public participation phase. This is where everybody and their cat and dog was like, Bitcoin, I'm making millions on this. Because anybody, any idiot could, I said this on the radio last night, that any idiot could throw a penny in a fountain, and any fountain in a mall that was named NXT BTC or any crypto coin, you could put a penny in it and then walk out with $100. Any idiot could do it. You were not a genius for doing this, and a lot of people thought they were. And that's the exact kind of people we like to have participate in those markets. Get them in here, get them sucked in, let them get a whole bunch of money, and then cause a sell-off so we can get back in on the next swing. Because all this accumulation was done by the pros. All this jazz was done by new money, and that's good. We want those people to get sucked in. That's the kind of operation we're getting going right now. Again, we're getting a lot of accumulation down here. Could this be a continuation? Sure, but we've broken a lot of these trend lines that I have drawn here. We're back above and sitting around 10,000. We're back above our 45. We're stuck in this arc. We need to get out of this arc. There's a lot of pressure above us to get higher, but if we can keep moving along inside this arc and along this 45, we'll break out of here nicely. So we should have some bullish sentiment still going forward here. Pretty nice. Bitcoin Cash, it's lagging a bit. It's not lagging. It finally formed into the same structure as its peers. Litecoin, man, it just wants to go higher. That is a huge move. Gee whiz. And Ethereum on this chart, it's inside. I don't know if it is on the hourly though. Yeah, we're inside the arc. Again, it means when price enters the arc and is trading into it, not outside of it, it's kind of stuck in stasis. So we got to wait for it to move out. But it's not getting sold off here, so it's gonna more than likely sit in here until we get closer to the line, and then it'll punch out. And if we look at this, Ethereum is moved too far ahead down in price. Remember the behavior of these angles. This 45 means that when price is on the 45, it's trading within equilibrium to price and time. And when it's trading here or here, it's trading too fast. Okay? It likes to snap back. We haven't had a snapback to this line yet. But when we get to here, expect it to shoot up quickly to reach this 45 again, because we are way displaced in time. Price, its equilibrium area is right up here at 1467. Even on the inverse, we are way extended down. So, all right, it's 8:30, and we have some trades in front of us. Cryptos are good. We have a few setups for. The only one that I'm really comfortable holding over the weekend, actually both of them, is the Aussie dollar and the euro. I will be holding those over the weekend. I did get into my trades early last night. Happy with them. Again, if you guys are in the money this week already, take it off. Start your weekend early. Take Friday off early. If you've had a rough week, like I've had a rough week, quit. I've got my trades in that are sitting in profit. That's fine. Not every week's going to be profitable, guys. And if anybody's joined the service expecting to make money every day, go somewhere else. like I said in that radio interview last night, that trading is hard, and just because it's easy to access the markets now doesn't mean that it's easy to make money. In fact, it's harder to make money now. Like I said, I mean, just because you can open a brokerage account and put some money in it doesn't mean you're going to become a millionaire off the bat. It's like grabbing a baseball bat and a glove and walking on to the training day of the New York Yankees and thinking that just because you have the equipment, that means that you're going to have the skill to do it. You don't. I mean, that's the hard truth. You have to lose a lot of money to be good at this. And losing money in the market's your tuition. I'm repeating all the things I said last night. But that is the truth. And so I hope you guys found some good analysis and education this week. And I hope you guys have a great rest of your trading day, rest of your trading week. Have a good weekend. Shut your brain off from the markets if you can. Give yourself ability to recharge, and then come back on Monday morning or Sunday night and look at the markets with a fresh set of eyes, and definitely give yourself the opportunity to recharge. And we will have a great week starting next week. All right, so have a good weekend, and I think it's a holiday weekend too. So yeah, we'll see you guys. I'll be here Monday. I will be here Monday, because I know not everybody trades. I work from home, so I like to work every day. I like to trade every day if I can, but not every day is a good trading day. Anyways, I'm babbling here. Anyways, have a good weekend, and we'll see you all next week. Bye-bye.